Mastering your partnerships with private investors is going to be absolutely critical to your success in property investing and developing. And to explore that subject and to explore how you can have successful relationships with private investors, I'm joined on Property Answers by John Howard.
As always.
As always, as always.
It's our little partnership, it's our little relationship we have, isn't it, Ranjan?
A nice cosy relationship. And the other relationship we have, of course, is Property Elevator.
It is.
Which is where we are private investors. I mean, we call ourselves angels, but we are private investors. Yeah. And we've both worked with private investors for many decades, I should say.
Well, you have. I haven't tended to. I've tended to just have one backer over those years. So I suppose you could argue that. But one, I've had, in my career, 40 odd years, I've had 3 backers.
Yes.
Which I'm still working with today, funnily enough. And of course, you end up doing all your own stuff as well as with the backers.
Yes. But I think the interesting thing about both of us is we've sat on both sides of the fence.
We have, and I do the odd joint venture where I put money up for people.
Yes.
I don't do a lot of it. I find it quite difficult, to be honest with you. I don't know, how do you find it? Because you've done that.
I've done that, yes. I think it's, you know what it does is that when you are an investor and you wear the investor hat, it allows you to play the borrower hat very well. Whether it's with a bank or a bridging company or whatever.
In a weird way, it's quite enjoyable having the other way, facing the other way, isn't it? It's quite enjoyable.
Because you know what you're looking for.
Yes.
So you know what, it's like if you are applying for a job.
Yeah.
If you have had people apply to you for a job,
yeah,
you pretty much know what you want as an employer. Yes. And if you were going for a job, you would just...
And you know the one thing I really want to see, even if it's on Property Elevator or if it's with someone coming to me for a joint venture, likability. I want to be able to like that person. I want to think, yes, I could work with them. If there was a problem, and there will be a problem with any joint venture, there'll be issues and problems and challenges.
Yes.
How are they going to deal with that challenge and problem?
Let's come on to that in a moment. Let's get back to a little bit of basics. We've got banks out there, you've got bridging companies out there. What is the reason why people out there should look for private investors in their mix in the first place?
Well, I think a lot of people starting out in property investment or development have not got that capital required that the banks expect. And the way round that now...
Skin in the game.
Skin in the game. And the way round that now is to find, and it's quite a fashionable way of doing it now, is to find a private investor who will put the money in. You normally probably offer them 10% interest, although of course they can get 5% now without doing anything in the bank. So that's less attractive than it was. You might have to pay a bit more. But the big turning point with all this has been the bridges. Because until 2010, there weren't any real bridging companies in the UK.
That's true.
Since then, there's all these bridges who will do development funding, and we all have to use them, unfortunately. And they will allow a second charge, whereas most clearing banks, the major 5 banks in the UK, in the old days, would never accept a second charge being put on the property. But all these bridging companies will. So that has opened up, the whole thing's opened right up, especially when the bridging companies will fund 100% of the build costs. So that's made a massive difference and made my life much harder, because the competition we have when we're looking at developments now is far greater than it ever was in the past, because it's that much easier for people to get into property development, to get into property investment.
Yes, but there's still this gap, isn't it? Yes, they'll fund 100% of the build cost.
Yes.
But that's only after you've got planning permission or permitted development, you've got a builder on board and all of that. But in order to buy the property or secure the property in the first place, unless you could do it through an option or whatever, you've got to buy it and put some skin in the game.
You have.
And that's where people often look for private investors.
So, Ranjan, if someone comes to you and cannot put any cash in at all, but they're very investable and the deal's good, would you still look at that in the same way, or would you insist that they put something in?
You know, I would like to think there would be exceptional circumstances. I haven't done that to date. I like to see something in the game, whether it's a property or perhaps some interest in another property. But for me, I haven't had that situation. I've had the situation where people have come to me with skin in the game, and I think that's very, very important, because there are all sorts of things that can go wrong in a project, and they often do. And little things go wrong all the time, quite frankly. Unexpected things go wrong all the time. And what I see when I get asked about deals that people have invested in that have gone belly up,
there's lots of those, by the way.
There are lots of those, and it's usually because whoever is leading that deal can walk away.
Yeah.
They can walk away because they've got nothing invested in it, and that leaves everyone up the creek.
That's very interesting. The least I would want is a personal guarantee.
Yes.
And potentially, if they've got a home, second charge on the house, because that concentrates the mind, and it's not that someone's going to take it off them, but it keeps them honest, as I call it, keeps the deal honest. You need something, without question, but the relationship between an investor and the dealer, if you like, the person who's coming and finding, how do you work that in terms of how, if you're the investor, for instance, how often do you want to see the project? What involvement do you actually want?
That all depends. Just going back to the personal guarantee thing, by the way, I think some people have abused personal guarantees because there's no register of how many of them you've dished out. If your net assets are £1 million, you could have dished out £100 million worth of personal guarantees.
Do you know what, Ranjan? I agree entirely with you. I always wonder why banks don't. One or two banks do, by the way, that when you get to a certain level, they do. I can assure you. But at this level we're talking about, with all due respect to most people listening, not everyone, I would say you're right. And they never seem to ask enough questions, in my view.
Personal guarantees is a massive loophole. But what was the question you asked me? I can't remember.
It was a very good question, but I just can't remember what it was now. The question was, what relationship would you want with
I see.
As an investor? How much involvement would you want? Because that's really important as well.
Absolutely. It all depends what I'm bringing to the party, and normally
you're bringing money. You're not bringing any expertise, are you? Let's be fair.
Well, I like to do deals where
that was a joke, by the way.
Contacts, expertise, know how to make it done, make things happen quicker.
Absolutely.
I like to bring that to the party. So it all depends how much, and it all depends on their skill and expertise level. I've done things that are completely more or less hands off, and it's just introduced to a couple of contacts because I have faith in their track record.
Yes.
But the other type of investment is where I'm probably making a bigger slice of the return, is where you're providing a lot of your own infrastructure to help. So it really depends.
Would you normally go 50-50 on a deal?
Not always.
You mean you're more generous than that? You'll give them more than 50%?
Well, it varies. It varies so much. I've done deals where I am benefiting 65. We've set up an SPV. We're putting in 50-50, but my split is 60-40.
Oh, what a surprise that is. A bit like on Elevator.
Well, sometimes because if you're
like
putting in a lot of know-how...
Your poor young man on Elevator, the latest series, episode 5, I think it was.
Something like
that.
The
14-year-old who's so amazing young man.
Amazing kid.
And you really let yourself down there.
Amazing kid.
Didn't you? You let yourself down, didn't you?
We'll show a little clip of it. I'll make it rather simple then. If it's a family operation, you've got a building quote for £90 per square foot for the works. We'll just put up all the money to come up with a competitive bid to win this that works for everybody. You don't have to put in any money in, but and obviously you learn a huge amount along the way because we're doing these stuff all the time. But it's a 90-10 split. We're putting in all the money because effectively you've sourced a deal that's on the public market.
Yeah.
You've presented it here, and you'll gain a huge amount of experience along the way from knowing how to cut these.
That's what I call tough education.
That's what I call ruthless. Look and learn.
It's actually a bargain because fundamentally that was a deal source.
No, it wasn't
a deal source.
No, it wasn't.
Investment.
He brought that deal to you, young man, if anyone hasn't watched it, please go and watch the episode, because it was a great episode where Ranjan really lets himself down on the basis that the boy, a very talented young man, brings the deal with his father, who is the builder, who's going to do all the work for you, Ranjan, and you then go and offer them quite a low amount compared to the rest of us who we would have offered a lot more if we wanted it. So traditionally, most of these deals, joint venture deals, are 50-50, aren't they? One person finds the deals, put the expertise in, the other person puts the money in. That is generally the case. In some cases, you know, it might be 35-65, is that right? My maths right? Yeah.
No, but listen, if
or
I
60-40. But if you go too low, then you really lose that respect, I think, of the other, you know, the other person who's finding the deal, who's got no money, you've got him or her on the ropes from day one, I think, really. And I think if you abuse that situation, then actually going forward, that relationship is never going to be the same as it should, not as good, as strong as it should be. Because that relationship has got to be really, really strong.
No, absolutely, absolutely. But I think in that particular scenario, there was something quite different in that in that mix. It was much more like a deal that's presented to you by a deal sourcer. Yes, they've found a builder, but that was at market rate and all the rest of it. I disagree with you entirely,
and I suggest to you, Ranjan, that if that person was 21 years old, you would have offered them 50%.
No, I don't think so in that scenario.
I think you're ageist.
No.
I think you're ageist, Ranjan.
I think there were a lot of, you know what, I don't actually remember the specifics of that deal, but I know there was some commercial... I know there were some commercial elements on the ground floor, a couple of uncertainties here and there.
Yeah, there was.
But, and it wasn't quite in the bag.
Luckily, Paul Mahoney came to his rescue.
He did, but he did it in a... he basically said, well, the deal was presented in a certain way. He basically said, well, if the deal turns out like this, then I'm willing to back it. But that scenario that he painted wouldn't happen, and didn't happen.
It was a bit woolly, Ranjan, but I do feel that when you start off at such a low amount, you do ruin that relationship from day one. And I think, personally, you know, it should really be 50-50, unless there's any extenuating circumstances why it shouldn't be. So from my point of view, what am I looking for as an investor? What am I looking for? I'm looking for someone who is honest, has got integrity, likability, is sensible with their figures. Doesn't come like elevator, isn't it? We haven't come on them, oh, we're going to get, you know, £1 million for something we think is worth 700,000. Well, you've lost us completely. Under promise and over deliver. The investor needs to go and look at the property once a month, I suggest. You need to make sure that the builder's there. If you're the person doing the job, make sure the builder turns up that day, the site's clean. Let them have a good look round as an investor, then take them for a coffee. You're not going on holiday with them. You're not inviting them for dinner. It's a business professional relationship. That's, I believe, how it should be.
I think what we're talking about now is more us being on the investor side, as opposed to people seeking private investors.
Yes.
And I think when you are dealing with investors, it's all about what people want from what outcome people want, and everyone's interests are different. So I think it's when people are looking for private investment, if they can match up with some other goals that they have, that the investor has, and come up with something else that's win-win, that can be very, very helpful.
Yeah, I mean, some people want a guaranteed return.
Yeah.
Some people want to be a bit racy than that and want to share the profit.
Yeah, yeah.
One thing that we've done in the past is where we've gone for a reasonable percentage return on the money, or 50% of the profit, whichever is the greater. So that's quite a clever way. So you say, well, we want 20% return on our money, or 50% net profit, whichever is the greater. Because that way, as an investor, you're relatively confident that you're going to get your money back and you're going to get your interest as well. And of course, if the deal goes well, you're going to do the deal again and again and again. And that's what's happened to me with my, total three backers I've had over the last 40 odd years, is that, I've had a good working relationship with each one. We've lost money at times, you know, but it's how you deal with that situation. And you need an investor who accepts the fact that now and again you're likely to lose money.
Okay, so what we have talked a lot about is us sitting on the investor side, and I think there are, as we've discussed, there are differences in our expectations, particularly when you're taking.
Yeah, I'm more generous than you by the sound of things.
No, I think no. What we're talking about is we haven't really talked about interest-only type of propositions. We've pretty much talked about getting involved in the share of the profit.
Joint venture, yeah.
But that is slightly different. I mean, that's the way it should be, really, because the bank is secure in their 70%.
Yeah.
So anything which is providing finance above that 70% loan to value is where it's more risky, and therefore there should be more reward.
Yeah, of course.
And that's why you get involved with either a much higher interest rate, like you mentioned, 20%, or a share of the profit.
That's how we would look at it.
That's how we would look at it.
That's exactly how we would look at it. So, Ranjan, what is the best way for people watching the show to find angel investors, as we call them? What's the best way of finding private investors in your experience? I
think the best way is to. I mean, it's been a few years since I've actively sought private investors, but to make everyone aware of what it is that you're doing, and also invite people that show an interest to site to see your existing project.
But if you haven't got a project, you know, some of these people are starting off afresh. Well done them, by the way, because it's ballsy and it's not easy. So how do those people do it?
Then get involved in someone else's project. Volunteer to help in some way, do a little bit of admin, and bring people that you come into contact with to that site.
So,
because what you're showing is you're using the site tool as a point of focus for a discussion and an interaction for them to get to know you, trust you, like you, to see how you deal with situations.
And of course, networking is the most important. Without, you know, I know I bang on about it, and people think I'm boring banging on about networking, but to me that's the best way of finding any deal and finding any investor. And your Baker Street would be a prime example of that, wouldn't it? You're still doing that, are you?
Absolutely. And the thing with networking is that you will meet interesting people at property networking events.
Baker Street's the one I don't get invited to, isn't it?
You're invited all the time.
Am I? Not on stage.
Networking.
Not on stage. I haven't been on stage for 4 years.
We'll sort that out.
Good.
Networking is something where you can meet people at a property networking event, but the thing is, the thing with property networking events, many people come because they want to be active in property.
Yes.
So if you're coming and spending an evening at a networking event to learn more, you tend to want to do something active rather than passive. So often the people you meet are not necessarily, you will meet some people that want to invest, but sometimes you will not.
So to wrap this up, one tip for,
by the way, those you'll meet through natural life.
One tip to find an angel investor, what would it be?
One tip to find an angel.
I've got one.
Go on.
You go first.
I found them through normal life, letting people know what I do.
Outside the school gates?
That sort of thing.
Okay.
You know, particularly parents' networking events that schools organise, things around sporting like golf and stuff like that, where people are successful. They're successful in other fields, in other professions and other businesses.
I asked for a quick answer and I've got about 10 minutes worth.
Which take them, which shows they're successful. They build up cash, but they don't have the time to do property, but they know you do property and want to access that through you.
The one thing I would say is if you've got an accountant or you know of accountants, ask the accountants, because they've got lots of clients normally who come into retirement, have got cash available, and they'll want to do some safe investments with that money, but they also might do something a little bit riskier and in their area. So if you can get an investor who lives locally to the property you're looking to purchase, fantastic, because they feel much more confident about the market, they know people and all the rest of it. It's giving that investor confidence is the key.
Yes.
So now we've both given the golden tip. I think my golden tip is better than yours, by the way, of course. But the very final thing we need to talk about is legals, isn't it? Because it's no point just giving someone the money which
Yeah.
some people do,
Yeah.
unbelievably,
Yeah.
Ranjan. What would your advice be?
I think the thing is, when you start discussing how you're going to come together over a deal, people naturally talk about the eventuality of a successful outcome.
Yeah.
So people don't think about writing down what their expectations are, what will happen if there's a successful outcome, how they can break out of it early if they can,
Yeah.
and what happens if
Goes
things
wrong.
don't go to plan. And that all needs to be written down and agreed between the two of
It
you.
needs to be a lawyer.
Of
really.
course it needs
to be a
lawyer.
legal agreement. And
But I think you should agree gentlemanly, like
Initially.
and put it down on a piece of paper that
then-
you understand, and then get the lawyers to
Yeah.
finesse it and word
and the
it
one
properly.
thing that I was always taught is if it stays in the drawer, the agreement, if that agreement ever has to come out the drawer, you've got a problem.
Yes, yes.
That's the truth, isn't it?
Yes, but it's there in the drawer.
I agree.
And the thing is, because it might be in the drawer, but it's not a case of, it's never a case of, well, I told him this, but you've come away with a different view of what I said. Because you've discussed it and drafted that document, it's in your mind what was in clause 3.2 and what was agreed.
I totally agree. Great advice, Ranjan.
So I hope you've enjoyed our chat on private investors, being a private investor and attracting private investors. That's all for this episode. Don't forget to like, comment and subscribe to the channel for more. See you guys in the next video. The Baker Street Property Meet is the UK's largest and #1 property investors networking event. The property market is going through monumental change right now, and at Baker Street Property Meet we aim to keep you up to date with the latest tips and tricks and insider tactics to help you keep on top of your property investing game and succeed in these troubled economic times. The Baker Street Property Meet is fundamentally about networking, because it's not what you know, it's who you know. And at Baker Street, we aim to connect you with the people to make your property journey a monumental success. There's no better place to be to further your property investment journey than the Baker Street Property Meet. So make sure you're here, you're connecting with myself and Andrew Roberts, our expert guest speakers, and 300 passionate property people each and every month. See you at the next meet. Get your spot at bakerstreetpropertymeet.com.